welcome all of you. We are here. I hope we are doing well, all of you. So we are here to discuss or do some backtesting about the trade that was there on ustec or Nasdaq on today, Wednesday, 29th of August 2024. So I'm just going through the trade we have taken today. I hope the ustec gave out 2 trades today, and that was after 9:30 a.m. New York time or Eastern time. So all of you, welcome, and we'll check what's going on. So most of the time, the strategy we use is ICT strategy. Specifically, we use the 2022 mentorship, which is very simple strategy or model that can everybody, those illiterate people, if I can understand it. So it's a very simple strategy. That's the one I use normally to analyze my chart. So I specifically trade mainly ustec and US30 because of their volatility. They are very volatile, and they will give you, if this one doesn't give, if ustec doesn't give opportunity, US30 always gives. So ustec especially is a Nasdaq, but in forex form. Also, US30 is a Dow Jones. They call it Dow Jones when it comes to stock market. But here's just futures, and we traded it as a forex format. So let's go through what happened today. How there was those 2 beautiful trades, which gave us more than around 200 plus pips, if it's not 250. So welcome all. Let's check what's happening here. So normally we start our analysis from high going downward. So we start with higher time frame, and then we go down as low as 1 minute. I specifically use 1 minute to take my trades. So let us check. I will start today with 4 hour. So my higher time frame is either weekly, daily, or 4 hour. So we'll start with 4 hour. And then after the higher time frame, there's a middle time frame. Middle time frame is basically use 1 hour and 15-minute time frame. Below 5 minutes and below, that's my lower time frame. That's where I take my entries. Okay. So the higher time frame, the main function of the higher time frame, it gives you a bigger picture. It gives you a bigger picture of what's happening in the market. So it's very simple. You check 2 things, as ICT said so many times. ICT himself said so many times. You only check 2 things in the market if you want to determine the bias. You determine liquidity, or you check liquidity, and you check fair value gap. If you can find those 2 things, then you are done with the market. You can do whatever you want in the market. He said the market goes for only 2 things. First one is liquidity, and the second one is imbalance or fair value gap. So we are looking for those things, and then we go to the lower time frame. So in the last week, this is the liquidity where the market has tested. It has tested this liquidity, and then it came down. It took this structure. So when a structure or the direction has changed in the market, what shows that is the structure break. So this structure or this swing low is taken. So when it's taken, what happened? A big fair value gap is formed. So this fair value gap is retested, and then another structure is breaking. This swing low is breaking again, broken again. So what happened? When then it formed a fair value gap, and then after that fair value gap, and the fair value gap was retested. So this is where we took the trade for today's trade. So we are here, this fair value gap that you can see, this big fair value gap was retested. And then when a point of interest or a fair value gap, as ICT has explained in his, what do you call it, BD array. So point of interest, one of the main points of interest is fair value gap or imbalance. So there's imbalance here. So this imbalance is retested today some number of times. Yesterday it was retested, and then again today it was retested. So that's where our opportunity is today. So that's what we need from 4 hour. We have determined there's this liquidity, there's this fair value gap, there's this again fair value gap or imbalance, and then it's also tested. That's what we need to see from the higher time frame. We need to see liquidity, we need to see fair value gap. So let's check the below liquidity. That's the up liquidity, and this is the, what do you call it, buy side liquidity. And there's also this sell side liquidity. There's this sell side liquidity. Liquidities are used for target. Sometimes you wait them to be taken away or taken. So as you wait them to be taken, you can also use them as a target for your trades where you place your take profit. So for example, this is the nearest liquidity we had after that fair value gap was tested. So there is that. This is a liquidity. Come here, you name it. You give it a name. So we give the name liquidity there. You name it, you label it. So that is liquidity. That is its name. So we go as low as 1 minute. 1 hour. So we check what's happening in the 1 hour also. So 1 hour is one of the most important time frames. It's a very important time frame. It gives you so many things. So as you can see, there is this liquidity. There was this liquidity formed in the 4 hour. What happened is this: the market went for that liquidity. So for today's trade, you take this and you mark when was the market open today. So that's when the market has opened. So you check what's going on. What have you seen in the higher time frame? I've seen that there is this fair value gap, and then the fair value gap was tested today. And then again, what happened? Today we were expecting this liquidity to be taken, or this above liquidity to be taken. We were waiting for one of those liquidities to be taken. This one below or this one up, one of them to be taken. So the market was here. Today, I think around in the morning, New York time, the market has reached this point. Although it did not take that liquidity, but it formed equal highs. So it did not sweep the liquidity, but also it has taken some liquidities below here, below there. So that was opportunity. So we will look at 15 minutes if there is chance. 15 minutes. So what happened in the 15 minutes? 15 minutes, you can see those two things, they are formed equal highs. Although if you check properly, this liquidity is taken. If you check it properly, that liquidity is taken today. Although it looks like equal highs, but yeah, it looks like equal highs. look like equal highs up there, although this one might have taken it. But there are also so many other liquidities. There is this liquidity also. There is also this liquidity. There was also that liquidity. There was also that liquidity. We can take out this high time frame fairly well. So there was this liquidity. There was also that one. All of them taken. So what do we expect when a liquidity is taken in the market? At first, we check liquidity. Did the market take out liquidity? So as you can see, the market has taken out liquidity up there. So you go to your time frame. When do you take the entries? Normally, I would take the entries after 9:30. So we go to 9:30. We mark the market. Where is the 9:30? That's where 9:30 is. So our trades are based on 9:30 a.m. New York time. So we look for any point of interest after that. After this, we can see a fair value gap here or imbalance. So there is that imbalance. Okay. There is this fair value gap there. I think it's a 15 minutes fair value gap. It's a 15 minutes fair value gap. Let's put it inside. So there is that 15 minutes fair value gap. So we have seen point of interest in the 15 minutes, which is a fair value gap, which has been retested. The market has been retested, that fair value gap. So we go to as low as 5 minutes. What happened in the 5 minutes? So you can see the market has retested this 15 minutes fair value gap, and then it went down. So there was that trade. So to take entries, you have to, if you cannot see much in the 5 minutes, you go as low as 3 minutes. You go as low as 3 minutes. So 3 minutes, the market is still, there's nothing you can see. This fair value gap, although it has not been revisited, but the best time or the best time frame to take entry is the 1 minute. So let's see what happened in the 1 minute. In this trade was around 10. So it was 7 hours ago. We took this trade. There was this 15 minutes fair value gap. Also, you can see this fair value gap in the. You can also see it in the. This is what I'm talking about. I said there were 2 trades. All of them I will show you for today. There were 2 trades. The market took this liquidity. The market took that liquidity. That's a liquidity. That's a buy side liquidity. And then the market has revisited this order block, the certain order block here. The market has revisited that order block. Let's change the color for the order block. So there was that liquidity, and then it has revisited that fair value gap. That order block. So after the order block, what happened? What happened is that the market has broken this structure. It took out this change of character. There's a change of character here. So you can see it. There is a swing low taken. When if a swing low is taken, it means the market has changed this direction. It was going up, and then now it's going down. So that's a change of character or break of structure. So the market has changed this, has reversed, or it has taken another direction. So that's a change of character. So you can see there's a change of character. Let us remove this mark for the time. So that's a change of character, and then after change of the character, what happened? All these structural swing are broken. This one is broken. This one is also broken. Then what happened? Then if you can check here, there is a fair value gap here. As you can see, if you check it properly, there is a fair value gap here. In fair value gap is visited. So when that fair value gap is visited, you take your short position mark. You go down, you take your short position mark, you place it here. That's the fair value gap. And then your target will be, mostly we target around 100 pips for Nasdaq and US30 or Dow Jones. Dow Jones and Nasdaq we mostly target for 100 pips. They always give 100 pips. They always give you 100 pips mostly. That is, and your stop loss will be 25. So 25, that's a ratio of 1 to ratio 4. So 4R. That's 100 pips. You can see it. You can take a picture of that and you will see it. So another opportunity was here around 10:30. Around 10:30 a.m. New York time, there was this fair value gap, 15-minute fair value gap, which is also visible in the 1 minute. Let me remove that. There was this fair value gap, also visible in the 1 minute. Also, it's there in the 15 minutes. I've seen it. So it has been revisited, and then when it's revisited, what happened is that structure is broken. So there is this break of structure. There was this structure. There was that structure. Okay. So that change of character, when it happened, there was this change of character. There was that change of character. Then when that break of structure, when it happened, what was there? There was this fair value gap. You can see it. Let me remove it so that you can see it properly. There is this fair value gap, this point and this point, or imbalance. If you don't know those things, we can talk about them. You can tell me in the comment section. So there was that fair value gap. It was tested 3 times, 1, 2, 3. The market was waiting for the orders, to collecting orders to take a short position. So you take your mark, you come here. What do? You target the nearest low. So our nearest low is this one. It's here. So that will be your take profit, and this will be your stop loss. This is 26 pips stop loss, and this is 127 pips take profit. So that's a ratio of, I think it's 6 or 5, ratio of 5. So you can see this one gave you around, and what you are trading is ustec. You can check ustec. What you are trading is ustec. ustec will give us, here it gave us 127 pips. Here it gave us 127 pips, and up there, here it gave us this 1 day. Imagine, in a matter of seconds, it gave you 2 opportunities, and that's another one. Our target was 100. Most of the time we target 100 if there is no structure below. And this was 100. So US Tech has given you, after 9:30, it gave you opportunity, which was 100 pips. And this is another 100 pips. So that is sum of a sum of 227 pips in a one day. So that's the best. That's how you take make money from the market. Those are the opportunities. If you want to follow up these things, you can subscribe to us. We will always backtest and forward test what's going on in the market, and we will share with you the trades we have taken for that day. So I'm saying I'm asking you to hit the subscribe button. You like, you comment, you share. So that's what I have for today. I'm saying thank you all. And this market is open for everyone. It's all about your computer, your screen. You can open a funding account. You can open. You want a live account from a broker. You can open. You don't allow others to scam you. Okay. So I'm saying bye. Thank you all for watching my video.